Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hey, everybody, and welcome to the Finovate podcast. Joining me today, we have Kelly Fryer, Executive Director at Fintech Sandbox. Kelly, thanks so much for taking the time.
Thanks for having me, Greg. Excited to be here.
So as you like to do on this show, I'll ask you to start by just taking a minute or so to introduce yourself and Fintech Sandbox.
Sure. So as you said, I've been the Executive Director or CEO of Fintech Sandbox for the past 4 years, previously with Techstars as their director for their Fintech Accelerator program in New York, which is where I'm based, is outside of the New York City area. Fintech Sandbox's mission is to advance financial innovation and lower barriers for early stage entrepreneurs by providing free access to data sets and resources to promising fintech entrepreneurs around the world. So our flagship program is our data access residency. Our vetted startups receive access to data sets from 40 plus data providers, folks like FactSet and Morningstar and Yodlee and Equifax and Atom and others, for up to 6 months to build and test their early stage fintech products. And then over the past 10 years, Fintech Sandbox has worked with over 360 startups around the world. And each year we save our startup founders tens of millions of dollars in data costs, which we're very, very excited about. And then, of course, in addition to our data access residency, Fintech Sandbox also hosts an annual conference called Boston Fintech Week to celebrate the fintech community, which in fact, we're gearing up for our 2024 event coming up in October, which is right around the corner.
Yeah, no, it's a really cool platform, and I think it's easy to understand, why it's so important. But let's dive into things in with a little bit more specificity. So, can you talk about what the residency looks like for innovators, how they would get involved? Just give us a little bit more detail.
Yeah, so in actual practice, startups submit an application and go through an interview process, very similar to an accelerator program, for example. We're looking at normal things, so team, understanding of market, product potential, competitive landscape, and also unique to us, your data use case. So what data do you need? How does it fit into your overall product roadmap? If a startup's accepted into the data access residency, we work with them to figure out the best data partners and data sets for their needs. Our team connects the entrepreneurs directly with the data providers to access the data for free for up to 6 months. And Fintech Sandbox has essentially pre-negotiated the agreements with the data providers on behalf of our startups to get that free access. So I would say most startups usually work with 1 to 4 data providers during the course of their kind of active time with the data access residency.
Cool. And let's talk more about the data providers themselves. Where are they coming from, and kind of what's their motivation for coming to get involved?
Sure. So like I mentioned, we work with 40 plus data providers. Many of them are names that you've probably heard of, like Dow Jones and Morningstar and Plaid and TransUnion and Equifax and MSCI and other great data providers. And for them, I think there's a few things. One, obviously, business development is one piece. They can make early relationships with these startups, and hopefully in the future, they might turn into commercial agreements as the startups continue to grow. 2, it's a great opportunity to get an idea of data use cases. You can see the innovative, fresh ways that the startups are using their data sets. And then the data providers could sell that same usage or product case to a hedge fund or an institutional investor who's obviously going to pay much more. And then 3 is just, deal flow. We've seen some data providers go on to invest or acquire some of the startups that have come through our program.
Yeah, no, I mean, when you phrase it in that way, obviously there's a lot of reasons to get involved. And it's not a surprise to hear so many of these big companies are interested in getting involved with these early stage companies. And it sounds really beneficial on both sides. I'm guessing a lot of innovators listening will already have a good idea of the value that you can provide. But let's dive into a little bit more. Why is it so important for startups to be able to play with the types of data that you're able to give them?
Sure. So number one, fintech startups need access to these data sets in order to get their products built, launched, and growing. That's just a simple fact. The data sets are kind of a basic requirement for many fintech startups. So the value of Fintech Sandbox's data access residency is that entrepreneurs are actually able to get access to the data sets in the first place, which isn't always easy. There are some data providers who won't really sell to startups or don't care to sell to startups. And then the entrepreneurs can access the data also in an affordable way. We're generally trying to help startups to get to the point of revenue or extend their runways. And so our program allows for that. Number two, I'd say, is building your product and testing it with real credible data from household name sources is huge when it comes to proving what their products are truly capable of. So being able to go into a client demo with an asset manager and say, hey, this demo is being run on actual data from FactSet, or meeting with a VC to say, we tested this with actual data from Equifax and know it works. That's a really big leg up for an early stage startup.
Yeah, no, it's massive. Let's approach it from the other side, because sometimes I always like to think about things, here's the best case scenario when it works well. What happens if you don't have access to this kind of data? What are the pitfalls or problems that some of these early stage fintechs could end up running into?
Not being able to build their product on real data is definitely one. So having to use either a lot of assumptions in, whatever data they're able to get their hands on, or even create their own kind of synthetic or fake data sets to test on, which aren't necessarily reflective of true data sets that they would be using once the product is live or once they do have customers. And then the true worst case scenario is running out of runway to pay for the data at all. Imagine an entrepreneur having this incredibly tough choice of, do I hire that extra engineer I need, or do I pay for this data that I need? That can be an incredibly tough spot to be in for an entrepreneur to make that choice, which is why, honestly, we see our program as being important to advancing innovation for that exact reason. Think of how many innovative and impactful products probably don't ever even get a chance to get to market because of some of these issues that early stage entrepreneurs face.
Yeah, certainly there are a lot of really good ideas that don't end up finding their way to the actual consumer facing side of it because they get hamstrung somewhere along the way. And obviously a lack of data, the way you're talking about it, it becomes something that's really important. It's a lifeblood in many cases for a lot of these companies. And to your point about kind of synthetic data, there's obviously more and more options around synthetic data coming up, but there's a big difference between having access to that and having access to real data that you can play with to validate some of the ideas. Because good ideas still need to be validated. And the companies who are able to have access to that kind of platform are able to do so much more quickly, which obviously makes them more attractive to venture capitalists, makes them more attractive to their potential customers down the road. So this ripple effect that you're enabling is really positive. What would you say is the sweet spot for when companies should get involved with you? Is there a particular stage or funding level that seems to make them the best fit for you?
Yeah, our recommendation is, usually pre-Series A. That's when most applicants come to us. So we see a lot of bootstrapped companies, pre-seed, seed stage startups. You generally need to have at least an alpha product already built. So you need to be more than just an idea, more than just a slide deck. That way you're actually in a position and ready to use the data sets. Like, it's great if you want to come to us and you have an idea for how you're going to use the data, but you're not ready to actually consume it. You're a bit too early for Fintech Sandbox. And then on the other end of the spectrum, you need to be under $1 million in ARR. I think once you've reached that stage, our data partners start to think, you can kind of afford to pay for the data sets yourselves. And it's harder for us to get you the access that you need to the data sets. So we generally interview on and accept startups on a rolling basis. We're kind of always interviewing companies, and from all over the world. It doesn't just have to be the US or the East Coast. We have companies from all over the world and across all areas of fintech, financial services, and honestly, even enterprise tech that could be applicable to the financial industry as you think about cybersecurity and reg tech. And other areas that could be applicable to a lot of different areas. So we definitely see it all, which is fun.
Yeah, and I think that is a really, your vantage point is potentially similar to ours, although of course at Finovate we see companies who are slightly later stage. Typically, the companies that get up on our stage have raised a Series A, potentially even a Series B or C, and they're kind of ready to go and make the leap and actually go out and acquire customers. And so I think we might have kind of similar viewpoints, but not identical viewpoints. And I actually want to ask you about the ecosystem, the broader fintech ecosystem that you're seeing right now, because one of the things that we've noticed so far in 2024, we're seeing a lot of companies that are new to Finovate who are getting on stage the first time. We're seeing a lot of companies who have raised Series A's and are ready to kind of go and make some more noise out there. I think this is a really positive thing. There's this kind of creativity that is coming back into the space right now. What are you seeing from your side in terms of, the types of companies, the types of technologies that are coming across your desk? Has it shifted at all in the last couple of years? Are you seeing anything that would indicate that there's potentially, a new wave of fintech on the horizon?
Yeah, I think some of the trends that you're mentioning do reflect what we've seen over the last few years, as well as if you think about a company that was maybe bootstrapped, 3 years ago, and now is raising their Series A, Series B, and you're seeing them. We saw this kind of consistent uptick of early stage companies during the pandemic. I think largely as folks were working on kind of their side project, side idea while they were working from home and not in front of their full-time day job employer. So we saw some more companies come out of that. And I think also during the pandemic, we saw a lot of financial challenges generally, whether that was across personal finance or lending or small businesses. And so I think you're right. It did spur a lot of new ideas. For us recently, especially with the economic kind of I don't want to say downturn, but economic slowdown and funding slowdown, we're seeing a big uptick right now of new applicants, folks looking to extend their runways as they're building their startups and into some new spaces. So we're seeing a lot of interest in like private markets data, for example. Again, I think folks looking at, can we come up with alternative financing options for private companies and small businesses and startups as that market is not as sure-footed as it was a few years ago? We're seeing a lot of interest in real estate data and getting access both across like mortgages, also like how do you find properties, how do you comp properties or use it as a benchmark for other indicators. And then, of course, obviously, as everybody's seen, a lot of AI, but I'd say AI across interesting ways in the investment space, whether that's kind of pulling together more accurate thematic sectors, some around kind of like compliance and regulation applications with AI and investing. So it's definitely an exciting time. I think we'll continue to see some new era of fintech, new ideas of fintech coming through.
Yeah, and I certainly hope so at any rate. I think this is a time where there's this kind of creative element coming back into fintech, and I think it's sorely needed. There are a lot of people who, for the past several years, have been kind of all chasing the same goal, looking at these specific processes. How can we make payments better, smoother? Which is not a bad goal, don't get me wrong, but obviously fintech needs to be more than just payments. There's a lot of different places where the technology can add value. And so it's nice to see innovators coming in and embracing some of these challenges. And I'm really glad to hear that you're seeing that kind of on the early side as well. And hopefully we'll get to see some of these companies come across our stage at Finovate as well when they're ready to make that leap. So before we kind of come to the close of the interview, I just want to ask, are there any specific success stories that you'd like to highlight? Any alumni coming out of the program that you think are particularly notable?
Sure. Yeah, we've had a number of incredible startups come through Fintech Sandbox's data access residency, especially as we celebrate our 10-year anniversary this year. We've had Novo Bank focus on small business banking, Zero Hash in the crypto space, Pedal, who's now being acquired by Empower, Mochify, Narmi, Clarity AI, Open Invest, which was acquired by JP Morgan a few years ago. And then Kensho, which was acquired by our partner S&P, was also one of our kind of first early days startups that came through the program. But that's just to name a few. Like I mentioned, we've worked with over 360 startups so far, and we're very excited about all of the entrepreneurs that we support.
Yeah. No, I can appreciate the need to kind of avoid playing favorites to too much of a degree, but certainly a lot of the companies that you're mentioning have gotten involved with Finovate as well. In fact, Mocha-Fi is one of the finalists for the Finovate Awards in the financial inclusion category, which will be fun to see how our judges score them in the final round. But congratulations to them on making it that far. I'd like to
Such
end
a
the
wonderful
interview.
product.
Yeah, no, absolutely, and they're partnering with BNY Mellon, which is really cool for the initiative. So, I'd like to end by kind of just zooming out and looking at, obviously you're celebrating your 10th anniversary right now. How do you see your model evolving over the coming years? There's sort of a lot of shifts on the horizon in the fintech space. Do you feel like there will be any structural changes that you'll have to make to stay relevant? Is there anything that you're kind of particularly worried about, particularly excited about as you think about the next few years?
Really good question. I think at Fintech Sandbox, we're constantly thinking about evolution, especially as it relates to adding value to the startups we support and to our community. Luckily, one of the first things we always hear from entrepreneurs that we meet is, "I'm so happy I met you. You have no idea how much value this is adding to me." So we're on the right track there. But for example, we're constantly pruning our list of data partners, proactively going after new data sets and providers to meet the evolving trends and data needs of the industry. Already this year, we've added 3 new data partners and expanded the data offerings with 8 of our existing data partners. So as you think again about AI, synthetic data, some of these things that we've talked about, the trends are constantly changing, and it's important for us that we're staying at the forefront or even being ahead of some of those data needs. And then I'd say more recently, we've also been thinking a lot about opportunities to partner with organizations outside of traditional financial services. There's obviously the running joke of like everything is a fintech right now, but you have companies like Walmart and Home Depot and auto manufacturers and others who are not financial services companies, but they offer financial products or they work with embedded fintech. And so, in addition to the incredible financial services partners we already work with, like Fidelity and Global Atlantic, Fintech Sandbox can add a lot of value to those companies who are playing a bit outside of the box as well. And so, we're really excited about the idea of that and exploring that more.
Yeah, well, certainly quite a few interesting things on the horizon. The value that you're able to provide, I think, is really clear to see. And I love hearing the stories of people who say, "I'm so glad I met you." That's really the most important piece. We unfortunately have to end the interview here, but it's been a terrific conversation. Again, I've been talking with Kelly Fryer, Executive Director at Fintech Sandbox. Kelly, thanks again for taking the time.
Bye, Greg. Thanks so much for having me.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.